People can see my screen, Abby.
Yeah.
Okay. So I was asked to talk more about the SCOB entries. That's what we're going to talk about today. So I think, as I said, we have first leg SCOB and then second leg SCOB. Sorry, and then third leg SCOB. What I meant was, let's say this place now was like your 4 hours, it's a 4 hour zone, a zone of interest that you're looking to buy from. So on the 15 minutes time frame, the price was doing something like this. And then the price came to just draw the line. So this is a 4 hour zone. And then the price comes to a 4 hour zone. At that zone, I'm looking for a third leg SCOB because normally the 4 hour zones stronger, are not that strong compared to the LMZ zones. So once price comes into the 4 hour zone, I don't look for the first leg SCOB. I look for more of a W pattern. If it's a buy, I wait for the price to give me a reaction. So this reaction to the upside now, if it's a 4 hour zone, I am not taking that SCOB. Then either a push down, and then once we are having this push down like this push down, this is where I am looking for because now it appears that this first leg down here that created this first leg, this SCOB is one leg. You understand? That's why I normally call it one leg SCOB, because this move down that now created the SCOB candles on the down part is one leg. Then this move up, this retracement up now is two leg, and then this third leg now that is coming down is what I call the third leg SCOB. So as this leg is an SCOB to, if the SCOB forms when the price is somewhere here, then Can you guys hear me?
Yeah, but your screen, I think
Okay, so
you can reshare the
mm,
screen, I beg.
yeah. I had a network glitch.
All right.
You guys can see Abby?
Uh,
Yeah, we can see your screen now.
Minister, Minister,
All right.
excuse me, Minister.
Yes,
Can you can you stream from YouTube?
yes.
Because on YouTube is writing waiting, is not streaming.
Okay. Let me check.
Okay, thank you very much.
All right.
Biggie, good evening.
Continue.
Good evening.
Yeah, good
Continue.
evening. All right. So the power zone, as I've explained, this push down. So on this first leg now, if it's a 4 hour zone and then we have an SCOB on this first leg, that is what is called the first leg SCOB from the 4 hour zone. I normally wait for the second leg up, and then on this third leg down, is where I start looking for an SCOB confirmation entry. So if I see an SCOB at this point here, then I can take the trade at this point. But if the price keeps falling down like this, and then until it comes down below this point, and then below this point is when I see the SCOB. So if I see an SCOB hello, hello, can you guys hear me?
Yes, I can hear you.
Okay,
Can you
my network
Hey,
is really bad.
sorry, you can reshare your screen because it's not showing now.
Yeah, I'm sharing it now.
Sorry, you can reshare your screen because it's not showing now. If not, don't talk to me years ago.
It's showing now, yeah.
Yes.
All right, and then so this one now is the case of the third leg SCOB, and then the same thing here. You can have bearish movement.
I think his network is really bad. I don't know.
The next zone. So on a 4-hour zone, these are the two types of entry that we look out for. Either this or this. On a 4-hour zone, these are the two entry patterns that we look out for. This or this. This or this. Those are the kind of entry patterns that we look out for on a 4-hour zone. So an example, let me just show you an example now. You see the particular trade now. I'm not on the trade, but I'm just like using this example now of 4-hour zones. Okay, sorry, let me talk to you guys that example I want to show. So this is a case of the 4 hours. So let's talk about the LMZ. So let's say you have a zone here and this zone, and then I will show you guys how to get the LMZ zones too. So you have like an LMZ zone here like this. So in the case of LMZ zone, this is a 4 hours LMZ zone, and then the price is coming down to the zone like this. SCOB. So let's say we have this first leg touching this LMZ zone. We have this first leg touching this LMZ zone. Now, before I can take this first leg SCOB on this LMZ zone, looking to the left, let's say the price comes like this to the zone. You understand? And then we push up. The only way I can, if I look to the left here, something like this, I must see that this some sort of liquidity. I must see that this first leg SCOB, the wick or the body or something of this first leg SCOB has taken out, come to the LMZ zone, and then I'm looking for this first leg entry. This first leg of the Asia session, or we've taken the Asian session low, or we've taken the low of the previous day. That's the only, you understand, straight entry from the LMZ zone. But in the case where we have this first leg SCOB touching this LMZ zone, and then the liquidity or the Asian low has not been swept, the price is somewhere, and the liquidity is down here, and we're at the LMZ zone, I wouldn't take the trade. I would wait for the price now to give me a third leg SCOB, to give me something like this, to come back into the zone. And then while coming back, I should see another form of SCOB, making it the third leg SCOB. Sorry. That's where I can look for the buy. That is in a case where this first leg does not take out the price. I normally now wait for the price to give us the third leg SCOB, which is this one here is first leg, this one here is second leg, then this is where I can take my entry from, or something like this. And then we come to the zone, and then we fail to take out the liquidity of the Asian low or the previous day low. The price is somewhere here like this. Can now look for a buy. That's how I take my trades on LMZ zones and then the 4 hour zone. Still the same concept. But now just that with the LMZ zones now the price must take out the liquidity of the previous day or the liquidity of the Asian low or Asian high. And then that is when I can take my first leg SCOB from the LMZ zone. So that's how it works, basically. So an example would be this trade now. Looking at hours, looking at the 4 hours, just for example purpose, I have an LMZ zone here. This point, I have an LMZ zone at this point. I have an LMZ zone. After this bearish candle, we had one bullish candle, so making this particular point a zone. So as the price now went to tap the zone on the 15 minutes time frame, this was, let me mark out the point. This candle now was the candle that was retesting this LMZ zone. So you go to 15 minutes time frame, you can now see that this was when the candle opened, the 4 hours candle, and then this was when it got to the zone. So you can see that when it got to the zone, we had an LMZ, we had an SCOB with candle. Let me take out this. We had, this was the candle, the SCOB candle. This one here was the SCOB candle. This candle here. This candle here was the SCOB candle. You can see that the wick of that candle took out the wick of the previous candle here. Took out the wick of the previous candle here. And then we closed very bearish, and then also engulfing this candle. So this is a good SCOB at an LMZ zone. And then you can see that the liquidity of the Asian low or Asian, in this case now Asian high, has already been swept prior to this time. This was the, if you look, that's why I have these sections here. This here was the high of the Asian high, and then the liquidity of that high has been swept. And then this was the previous day. Here was the previous day. You can see that into this new day now, we've also taken the liquidity of the previous day. So for me, we've taken the major liquidities. For me, we've taken the major liquidities for the day already. So now this price now coming into this LMZ zone now can fall freely because there is no form of liquidity that the market has to go and target again upward. So we should get a nice fall from this particular pair. But now this pair doesn't move like gold during Asian session. That was why, if not, I was looking at this trade to take the trade, but that was why I did not take the trade, because most times coming into Asian session now, the spreads are usually wider, like fucking wide. The spreads are usually fucking wide. So that was why I did not take this trade. If not, this was a trade I was monitoring and also wanted to take because everything aligned perfectly. After we took out the previous day high, we took out the Asian high, the price came to an LMZ zone, and then we had a sweep of the liquidity of the previous candle, which was an SCOB candle. And so at this point now, you can take your entry from that candle. And then your stop loss will be above that candle, that's the SCOB candle. And then you can just target whatever. For me, I was targeting a 1:3 risk to reward ratio, and you can see that we were almost at it. In fact, the price has just hit the stuff clean, very clean. You see, but it still has some potential, to the downside. Still has some potential, but because of the spread, when we do session overlap too, and the accounts I trade, FCMO accounts, the swap during um during the shift to the new day is usually very high. So that's why I just avoid holding trades overnight. I normally, and then I avoid taking trades towards this time so that I won't have to pay for too much swap. So that's it. That's how you enter from LMZ zones. And also, if you look at the LMZ zone that I marked out here, you can see that the price has respected the zone previously like countless times. You can see that we've had a reaction from this point. We've had a reaction from this point. So one reaction, two reaction. This was the third reaction. So if you just plot a little trend line, you can see that we're having some sort of, something like this. Touch, and then we are touching again here. These are just little confluence. It's not like something really. And then you can see that we also have flipping trend line at this point. We had flipping trend line at this point, where we had like one touch here. We had the market touched at this point, respected here, and then the market now broke the trend line. Market broke the trend line, and then this was like a retest of the trend line, at least a bit, which is why it is dropping now like this. You understand? So let me just go ahead and show you guys the difference between 4-hour zones and the LMZ zones. But so far, I hope the explanation has been clear. Can you guys hear me?
I don't know.
I will
Yeah,
hear you.
Okay, but hope like I mean like hope the explanation has been clear. Like things it has been clear, yeah.
Sure, it is.
All right. So let me go ahead to clear my chart and just show you guys the difference between the LMZ zone and the 4 hour zone. Like the way I use them. So for example, you see, let's say we had a push downward and then a retracement like this, and then we had we now know that these are our points of interest. We have this point here, this low. These are the immediate breaks. So now for me, this place now is the 4 hours structure. Why I call it the 4 hours like an indecision zone because we have an upper zone here. We have an upper zone here. This zone. We have an upper zone here. This upper zone now is the last. That's why I call it the last minute zone. That's why I call it the last minute zone. And then these are usually the 4 hour zone because if we are in a trending market, a very very strong momentum market, this 4 hour zone can prove very good to us to enter the trade from. But now this is not the last point of where we know that the price must like like it's a must that the price must react from those particular zones or, or else the trend has changed. That is where I call the last minute zones. The zones where if the price comes into and the price does not respect it, you understand? If the price comes to those zones and then the price does not respect those zones and the price closes above those zones are what we call the last minute zones because they are the last point of interest for the market. So if the market gets to those points and then the market does not respect those points, we now know that the trend of that particular market has actually changed to a new side or a new dimension. So now the last minute zones are the last point of interest for the market to come to before a change in direction. So that is why I call them the strongest zones because on those zones is where the market tends to respect more if the trend actually wants to continue to the downside or to the upside. So now you can see that we have 4 hour zone and then we have because this particular zone, the market can come to this zone and violate the zone because the market knows that it has and like a reserve where it can react from. It's just like us, like individuals. Let's say we have, for example, we have like 100,000 naira in our account. You understand? We can easily spend and then in our head we know we have it in our head or in our mind already that 30,000 naira is the least that you can drop your all for example let's just say 20k. If you have like 100k in your account, your last point of spending. If your money goes below that 20k, that means you are in trouble. So you can do all your spending from your 100k. You can spend the 100, you can spend, and then this LMZ zone now is like your 20k limit, where if the price if you get to 20k and then the price goes below that 20k, that means you are in trouble. price does not respect your omo, I'm in trouble, then you still feel like a big boy. You spend 40K, you're still okay. You spend 30K, you're still okay. But once this particular point now has now been stretched till you get to your last minute zone, to your last cover, like your 20K now that you've considered as your last point of spending. At this point now, you become very careful. At this point, you become very careful. That's the same thing with the market. When the market gets to LMZ zones, the market becomes very, very careful, because if the trend actually wants to continue, it has to just respect that LMZ zone. But if the trend wants to actually shift, that's when the market moves ahead to break above the zone, and then you can now see the trend now will start shifting to a new direction. So those are the purpose of LMZ zones. They are like the last minute zones for the market. They are like the last point of interest for the market before we can see any form of reaction. The same thing, you see the particular zone now. For example, we broke above, in this case now, the market went up, came down, came down here, and then the market now broke above this place. So now this particular zone now is the 4 hour zone. This first candle here is the 4 hours candle. So I normally mark this as 4 hours. This is the first candle, is the 4 hours candle. Then the last candle is what is considered the LMZ candle, the LMZ zone, because that is the last point of interest for that market. Because if the market violates this particular zone here, that means we've now shifted trend from bullish to bearish. So when the price came to this 4 hour zone, it did all the frivolity. It played around, moved up a bit, played around, and then it now disrespected that zone, because there is still money now. You still have like your 100K. You spent like 50K. You're still feeling like a big boy. Then once the price starts coming down to this your 20K zone, this is the point you become very, very careful with the way you spend. The same thing with the market. This is the point that the market makes a very strong decision. If it actually wants to respect its bullish movement, or it wants to change the trend direction. So that's why these zones are very, very important. And then you can see that once the price got to the LMZ zone at this point, the price skyrocketed, because the overall momentum is still to the upside. The overall momentum is still to the upside. And you can see that's where the market picked up momentum, and then the market shot up back into this zone here. Then you can see that we now have an internal structure too. This particular place was the 4 hour zone. This place was the 4 hour zone. The market respected it a bit, then came back down to the LMZ zone here, because the LMZ zones are like the last point of interest for the market before we can see a shift in the trend. So the market came to the respected it and shot up to the upside. The same thing, this particular point was the 4 hour zone. This was the 4 hour zone. And then this was the LMZ zone. This was the LMZ zone. And then you can see that the market came to the LMZ zone, and then the market shot up immediately back to this zone. So this was where as of this was where I took this buy trade that gave me a 1:4. This point was where I took the buy trade. Going down to the 15 minutes time frame to check what I told you about the LMZ zones, how to enter from those zones. So this now was the point. And then I told you that once the price comes down to your LMZ zone, you should look for an SCOB candle, which is the first leg. And then this here was the first SCOB candle that the market printed. This here was the first SCOB candle that the market printed. And then I told you that once the market is at LMZ zone and then gives you an SCOB, check to the left side if you're looking for a buy. If the previous day low has been swept or the Asian low has been swept. And as you can see, this box here is my Asian low, is my Asian box. And then you can see that this particular low here was the low of the Asian range. This particular low was the low of the Asian range liquidity. So you can see that this particular candle actually swept the liquidity of the Asian low. So this confirmed to me as my first entry. So this was where I had my first entry for the buy on this particular trade. And then my stop loss was at the low of that candle. And then you can see that the next candle went up a bit, then closed below, and then took me action that I'm still bullish. So the market gave me a third leg SCOB, which was this. So this particular SCOB failed. That particular one failed, and then I had a loss there. And then the market gave me another SCOB entry again. And then since we've taken out the liquidity of the Asian low, I was pretty sure that this market was going to push up. So I took another entry at this point when the market was here. And then my stop loss was also below that candle. You can see that the market came like a beast to take me out, but it didn't take me out. And then from there, the market just decided to shoot up to my take profit of 1:4. And then this was the point where I got out from the trade for a 1:4. If you look at the group where I posted it, you can see that I actually took the trade. And then this was just the main reason why I took the trade, which I've shared with you guys now. So that's how you use LMZ zones, and that's how you use SCOB entries. So yeah, I don't know if any guys have any question before we call it a day. Yeah. Any
Any
question?
question? I don't know. I don't think. I don't think there's question. All right, bro. So we can call it a day.
All right. All
Yeah.
right. That's
Thank
nice.
you so much.
No problem,
Thank
brother.
you.
I wish you guys
All
all the
right.
best
All right.
and a happy trading week ahead.
But I think you should do this thing for them once.
What?
Breakdown for gold.
Okay, for gold.
Yes, just do breakdown
Oh, okay.
for gold
Okay.
for them. Just do it with this your jam. Is it jam or jammy 30? You get,
Okay. Yeah, German
because
30. Yeah.
I've been watching you. You used to like,
You said?
you always take this jammy 30. So I don't know. I don't know how, because I've not been
It's
looking at this particular thing. I don't know how it's like, how the market used to be.
Oh, okay. The market, German 30 market is very swift. It's very sweet too. Like, funny enough, but I even like, let's say, prefer it more than gold. Like, it's very sweet, and the movements are very swift. And funny thing is that doesn't like news. USD news does not affect it, so I can trade it on my prop firm without having being scared of breaking any
News.
rule, any news rule. Yeah, you can
Okay.
trade it on your Profem account without being scared of you violating any form of rules on their news trading, because it's not affected by US news or any form of news. You can just trade your stuff, your skin, and just go like that.
Yeah,
So
it's like
it's a very sweet pair.
you schedule there to teach us how
It's
you calculate the pips.
oh, okay, okay. There's no problem with that now.
All right.
So yeah, top down analysis on gold. For me, I normally start from I just for me though the way I trade this gold now, I just look at the daily and the 4 hour structures alone. I look at daily and 4 hours alone, and then the first thing you do most times is you look at your daily. What trend are you in on the daily time frame? That will guide you on what to do. And you know that we have three market cycles. We have the extension phase, we have the continuation phase, and then we have the reversal phase. So for me, the way it's clear for me to really understand and to trade and follow the trend is I need to identify what phase I'm in the market. If I'm in my continuation phase, if I'm in my reversal phase, or if I'm in my extension phase. By extension phase, I mean at this point here we had a break of market structure on the daily time frame. We had a break of structure on the daily time frame. So you know that once you have a BOS now, you don't actually know when this particular bullish movement on this gold time frame will come to an end. So once this structure has been broken from this point, from this, let's go to the 4 hours time frame. So now from this point that we broke above this daily zone, this is when we enter our extension phase. And then when you're in your extension phase, you only look for buys. If the market is bullish, you only look for buys in your extension phase, because now we've broken above this daily structure. So we only look for buys on the 4 hours on the extension phase. So that's why at this point that week I was just buying gold. I was just trying to buy gold at this point, and then that was why I bought gold here too at this zone. On this zone here, it violated this particular 4 hour zone, but on Owanda, it didn't violate it. So that was why I took this buy. So I was just looking for only buys because we were in an extension phase. And then normally after extension phase is done, the next phase you enter in the market is what we call the retracement phase or the reversal phase. So for me right now, gold is on the reversal phase on the 4 hours time frame and on the daily time frame. Gold is on a reversal um, phase. So and on reversal phase, I only look to sell on reversal phase unless we have like a form of internal structure, because you know we have external structures and then we have internal structures which are like the substructures. What I mean by that is this here, this movement here is the external structure on gold. This is the external structure. So all these other ones here are internal structures. They are the internal structures on gold. But overall, we are in a reversal phase on gold, which is like looking for sales alone on gold. So now my point is get down to this LMZ zone here. For us to get down to this LMZ zone here. So if we get down to this LMZ zone here, this is the point where I will start looking for selling opportunities in the market to the downside. Or if we actually now break below this point here, if we break below, because if you look, this is the main in a substructure, this is the main structure of the substructure. So if this main structure of the substructure has been broken, something like this, the market closes below here, then I can start looking for more reversals to the downside. So that is what I'm looking at for gold. Gold is in a reversal phase right now. So once the reversal phase is done, that is when we can now go into our continuation phase. And then we can only go into our continuation phase if the gold actually starts retracing back down into a daily level here. So long term, we're looking for gold to go check react from this in the reversal phase structure here, and then we can start riding the market down until we get to this daily time frame. And it's also possible that the price can, if we come tomorrow now, the price might actually probably close and close above this particular level, and then we now know that we are still bullish on gold. So we can start looking for. We now know that the gold has now entered an extension phase where we will now shift our bias and be looking for just buys alone on gold. So that is my analysis on gold right now. So I don't know if it's clear enough. So is it clear enough?
Yeah, it is. It is. Thank you very much.
Sir?
I said it's clear. It's very
Can you guys hear me?
yeah, we can hear you.
Yes, yes.
Okay, okay. So we are done here. I can't really hear anything anymore. Okay, so we are done, yeah? I can't hear anything, no.
Yes, I can hear you. I can hear you. Perfect.
All right, all right. So we are done now. We can leave, yeah?